The combination of these indicators will allow you to spot high-quality scalping trades with an insanely high win rate. The concepts which we are going to discuss in this video allowed us to win 9 out of 10 trades last week. Not knowing this powerful combination of trading indicators will put you at a significant disadvantage. You can apply these incredibly effective indicators for different asset classes whenever you trade forex, crypto, options, or stocks. During this video, we also will show you how you can get access to our top-notch private indicator known as Quant Algo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell so that you can keep up to date with new content releases. At this point, let's discuss all needed indicators required for profitable scalping. So in this video, we will take a look at 3 top-notch free indicators which we personally use in our day-to-day trading. Firstly, we will consider the indicator which will enable us to determine the bias, allowing us to look for long or short trade setups as a result. Next, we are going to discuss the indicator which will allow us to filter out a lot of false signals, thus providing us with additional confirmation. And finally, we will show you how to use one of the most popular indicators for proper risk management. Each indicator discussed in this video will have an immediate practical integration based on which we will build a profitable scalping strategy. Let's add the first indicator, which will act as a trigger event. Go to the Indicators tab, type Williams, and choose the following indicator. At this point, let's eliminate some of the market noise by adjusting the settings. So we should change the length to 30 and the EMA period to 12. Also, let's change the EMA color to white. First of all, we should wait for the yellow line to break above -20. Next, we need to see the yellow line drop below the white line to receive an early trigger event for the trade short. Consequently, we want to see the yellow line break out below the -80 with a follow-up break above the white line to confirm our bullish conditions. Also, just for simplification, let's assume that the area above -20 is in our bought zone and the area below -80 is in our sold zone, like with the RSI. However, as you have already noticed, we still have multiple crossovers along the bottom and along the top. So to eliminate the market noise, which is caused by fake crossovers even further, let's add another indicator which will act for us as a confirmation event. So if you are enjoying the video, leave a like on it. Also, let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Now, we should add something that provides us with an additional confidence in terms of our bias, and this problem perfectly solves the volume-weighted average price indicator, known as Vivap. Also, let's disable the bands because we're not going to use them here, so we should wait for the price to break above Vivap to confirm our bias as bullish, and wait for the price to break below Vivap to confirm the bearish bias. Vivap is a perfect combination for our trigger event because if we, for example, use the EMA or SMA as a confirmation, they will still give us a lot of false signals. However, you can backtest it with the EMA as well. And let us know your results in the comments below. Finally, the last indicator. Once we enter a long or short trade, we should properly manage our position, which is about half of the success. In this part, let's discuss the best indicator that allows us to place volatility adjusted stop loss. The indicator is the average true range, or ATR. So we need to remain all settings unchanged. Since it is a scalping strategy, we should protect ourselves against volatility spikes and liquidity gaps, and ATR-based stop loss is the best solution. So let's consider it as an example. Let's say that all our previously discussed criteria are met, and you enter the trade long right here with an initial stop loss below the entry candle. At this point, the ATR is presently 81. So you should add 81 to your initial stop loss value, and boom, as you can see, your stop loss easily held this pullback, allowing you to catch the 15-to-1 risk to reward monster trade. For now, let's move to the next part of the video, and look at more market examples. During this part, we will also go deeper into risk management concepts. So here is gold, 5-minute time frame, and let's start a small backtesting process to see how the combination of these indicators perform in a real market. As you can see, the Williams indicator gives us a bullish bias right here, as the yellow line is in our sold area, and more importantly, it breaks above the EMA white line. Now we need to wait for the Vivap breakout. And here it is. However, as you can see, we have long wick candles right here, which is a not good breakout price action. We recommend you guys to wait for a beautiful momentum-backed breakout with a great engulfing candles before entering the trade. But anyway, let's assume that we enter the trade right here. So our initial stop loss is below the entry candle, but we need to add the ATR value to it. At this point, the ATR equals 4.43, so we should modify the stop loss to this value. And here is our new stop loss. As you can see, we easily receive a perfect 2-for-1 risk-to-reward trade. And when it comes to risk management, you should initially target 1-to-1 risk-to-reward. Once the price hits your initial take profit, you need to close half position and move stop loss to break even with the next target of 2-for-1 risk-to-reward. Risk per trade should not exceed 1% of your account. However, this strategy can deliver significantly better risk to reward, and also our stop loss is protected by ATR against the potential pullback. So here are the basic risk management rules that we recommend, and feel free to adjust them according to your trading style. Before we move on, we want to share with you our top private indicator known as Quant Algo, which can be used in combination with previously discussed indicators or by itself. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it in any time frame for different asset classes. So if you want to access Quant Algo to get results fast, all links will be in the description and in the comment section below as well. Without this algo, will put you at a disadvantage. So let's consider a few more examples. As you can see right here, our trigger event is confirmed, and now we need to wait for a confirmation event, meaning the breakout below the Vivap. And here it is. So we enter the trade right in this breakout candle, stop loss above the entry candle, plus ATR value of 0.8, and boom, another 2-for-1 risk to reward trade. So let's consider the next example. So as you can see along the bottom, the yellow line is in our sold zone. Next, we can see that the yellow line breaks above the white line, which means that our trigger event is complete. Now we need to wait for the price to break above Vivap, and here it is. So we enter the trade right on the breakout candle. Our initial stop loss is below the entry candle plus the ATR value, which is 1.05 at this point. So here is our new ATR adjusted stop loss, and as you can see, we received another beautiful 2-for-1 risk to reward trade. So moving on to the next example. As you can see at this point, the Williams line is now overbought, and then it drops below the EMA line. So once again, our trigger event for the trade entry short has been completed. Now we need to wait for the Vivap breakout, and here it is. We have a beautiful Vivap breakout candle right here, and we enter the trade short right on this candle. Initial stop loss above the entry candle, plus ATR value of 1.88. So here's our adjusted stop loss, and as you can see, the price hits only our first take profit, giving us 1-to-1 risk to reward. And here is a pro tip. If the confirmation event presents itself when the Williams yellow line is in our sold or overbought area, you should follow our previously discussed conservative risk management drills and initially target 1-to-1 risk to reward with a follow-up stop loss trail to break even, because we have some probability of a trend change at this point. So let's consider the final example. So as you can see, we received a perfect trigger event along the bottom, so that we can move to the next step. And as you can see, we have a beautiful momentum-backed Vivap breakout right here. So we enter the trade on this breakout candle with an initial stop loss below the entry candle plus ATR value, which at this point equals 1.51. So here's our final ATR adjusted stop loss. And as you can see, we received another monster 2-for-1 risk to reward trade, and the price then proceeded up even further, giving for us perfect 4-for-1 risk to reward trade as well. So if you're enjoying the video, leave a like on it and subscribe to our channel, as it always motivates us to release new content more often. So thanks for your time, and I'll see you in the next episode.